Okay guys, welcome to today's video, and today we're just going to be talking about some of the mistakes lots of traders, right, make, especially SMC traders make before when they were marking their demand zones, marking the supply zones. There is something called directional bias. It is the first thing you want to look out, right? It is the first thing you want to look at. And I did a video on, it's either day 3 and day 4, where I talked about directional bias. So in this video we'll be looking at the mistakes some SMC traders will make if they fail to look at direction before taking their trades. Now, there are two ways to look for your directional bias. The first method is looking out for key levels on higher time frame. The second method is also watching the trend lines. Very important. If these two things are not in check, you should not be entering any SMC setups. Remember, we also talked about higher time frames and entries. We take our entries, say from 15 minutes, 5 minutes, 1 hour. We use 1 hour, 4 hours for analysis. You should know this. Then we use our time frames to determine our direction. For example, this is gold USDT, right? This is gold. Now, if I go to the, say, weekly time frame, I want to map out the direction, right? I want to map out the direction. That is, I want to look for directional bias based on key levels where gold has been bouncing off and on, right? If I go, say, daily, I can see things very clearly. If I want to mark just recent zones that I can trade off, for example, this right here, right? This is a key level that gold bounced off. From here we saw a tap, reject. Here we saw a tap, reject. We saw a tap, reject, right? Now this is also another key level, right, for gold. Now this is also another key level, is resting at the top right here. I've taught you guys how to identify them. Just regions where price is using as resistance and support, breaks out, uses as resistance and support every time, right? Okay, this is another key level. You see it bounce, rejection, a tap, a rejection, a tap, a rejection, a tap here, rejection, a tap here, rejection, a tap here, rejection, right? Then we can also use this place, one reject, second rejection, third rejection. We can also have a mid-range right here. Okay, because these are regions also where price has been rejecting from on gold. Now once you have this, you know, okay, these are zones price is bouncing off, right? And now you'll be looking at this. When gold was here, it bounced off this, then immediately it tap, gold started selling, broke out from this and started selling to the downside. What will be possible regions that gold can get to? Maybe another mid-range region, because there's another mid-range on the 4 hours. There's another mid-range right here. Between these two range, there's a mid-range. Let me put a line on this mid-range. You can see it very tiny, right? There's also a mid-range of resistance. This zone price was dumping from here. It got rejected, bounce off, right? Tap here, we saw rejection to the upside before it broke out again. Tap here, we saw a rejection to the upside. So this is another mid-range level. Just identify it. Now say you go to the 4 hours time frame, right? You can also see price reacting to those mid-range. You can see price tapping gold. Now there's a rejection. Is it going to break? We don't know, right? You are looking for price reaction. But here's the key point I want to point out. Now you are going to your analysis time frame, let's say 1 hour time frame. Now a lot of people who did not point out their key levels when gold was trading in this direction last week, right? Someone that mapped out key levels knows that, oh, gold is heading for a key level. Oh, gold has break out from a mid-range of that key level. Oh, gold was even coming from a bounce, right? Gold was even coming from a bounce, tap into the key level, tap into the mid-range, tap into the key level, broke down to the mid-range, broke out, Come, you have that at the back of your mind. Now, this is not SMC. This is you looking for direction before using SMC to catch trades. But someone that do not do this would see gold pumping all the way from here, right? And they'll be marking out demand levels. Of course, this is a beautiful demand zone where gold bounce up from. Right, let me change the color of this things. Okay, no, let me use something different. Say blue. Okay, this is a beautiful demand. This other place, there was an impulsive move also. It's a demand. This other place also, an impulsive move here. It's a demand zone. Here is also a demand zone. Here is also a demand zone with fair value gap and everything. Right? With fair value gap and everything, very, very clear. Okay? But what happened? Immediately gold tapped into this key resistance level on the weekly time frame, on the daily time frame. It started rejecting to the downside. Lots of SMC traders that do not use directional bias, maybe this key level bias now, all they see that is a rejection. They'll be like, oh, price is coming to retrace. They will want to buy off this demand level. And what will happen to them? What will happen? They will hit SL. They will hit SL of this demand. Then they'll be like, okay, price is using here as what? Inducement. It's going to buy off this other demand zone. Then they will take their trade here. What happened on this demand zone? Another what? Another SL. Okay? Another SL. Right here again. They'll be like, oh, the price wants to take multiple demand zones. There's still another demand zone. If this demand does not hold, this other demand will hold. Right? We are still bullish on gold. Then they come to this demand again. And they put their trade entry. Then maybe this one triggers now. Right? If you look at this demand, it triggered, it rejected price to the upside. They'll be like, oh, gold is buying. Massive profit on gold. But what happened? Gold still came back to what? It's their what? SL. Why? You do not now, even now, to use, remember I said directional bias can be determined from key levels and what trend line. If you map out the trend line of gold right here, when it was making this bullish move, this bullish trend line on this time frame has been taken out. Gold has violated this trend line from this region. So once you even say you buy from this along the market from this region, you hit SL. You are looking at this, that your mind will tell you that, oh, direction has changed. There's a trend line. Trend line has shifted. One, it did not even shift this trend line. It did not shift the trend line till it got what? On a high time frame key level of resistance. That there was an impulsive move to the downside and it shifted trend line. You see people on marking, look at another demand zone. They'll be like, oh, what happened to them? SL. Another demand zone. Oh, there's a fair value gap. All this one is inducement. Gold we buy. Immediately go tap into the demand. SL. Right? So having a directional bias helps you. I'm not saying it's going to give you 100%. You're going to make 100% trades. You're not going to hit SL. Or that is not what I'm saying. It's going to reduce this kind of trades. Going to reduce you making this. You see a lot of people, they will even go to 15 minutes time frame looking for entries on all this. It's going to take it out. Why? As soon as this trend line has been broken and price has tapped into a key level on a higher time frame, all this trend line now is going to, what is price going to use it as trend line liquidity? All of them is going to use them as trend line liquidity. So immediately after sweeping this trend, you can be even surprised now, go start buying. It's possible it has taken enough liquidity from here, it can start buying. But if the impulsive move coming from here is strong, it might even buy, tap into this mid-range and start going to the lower range. Very, very possible. Right? So these are all the things a lot of you guys need to look out so that you'll not be eating multiple SL. Multiple SL. You just look at any demand, any SMC setup. Oh, someone sees an SMC setup forming on this place now. Maybe some SMC setup that is forming after a demand, after a key level resistance has been hit. You're now seeing SMC setup of buy here, and you're not taking the buy blindly. You get stopped out. So instead of losing money anyhow, right, you want to look at the direction first. Anytime you wake up on the chart, start from higher time frames, no matter what. Don't just go to entry time frames and start looking for SMC setup. You're going to be seeing multiple SMC setups. Yeah, you're going to, okay, look at this now. I know this would have been a trap. Look at this now on the 15 minutes time frame. Someone that does not look at higher time frame direction would say, oh, this is sweep, right? Now this is 15 minutes now. They'll say this is sweep. We can trade this. It's SMC. This is what? They'll say this is a break of structure to the upside, right? They might even go as low as 5 minutes time frame, so that they'll see it very clearly. They'll be like, oh, sharp SMC setup. Sweep, good. They'll say sweep, break of structure to the upside. This movement to the downside, they'll call it inducement. Price make it another break of structure. Ooh, beautiful. Price is now coming back here. They'll be like, ooh, this is a double inducement level, right? 2 equal lows. They'll be like, beautiful. They'll mark here as their order block. They'll want to take the trade. Then what happens? SL. SL. Price even came back and used this demand as support, as supply, or this support as resistance to sell to the downside. They'll be like, SL. You come here again. On the other demand, you'll be looking at beautiful SMC setup. You'll be like, ooh, this is a break of structure. 5 minutes time frame confirmation. Be like, break of structure. Ooh, like, this is inducement. They'll come here, they'll buy off this order block. They say it's a confirmation entry. What happened again? SL. Price came back. Use that demand as supply to sell to the downside. These are traders who are not very patient, lose money in the market. And you'll be like, is the strategy, this and that. Look at, just imagine, you are not looking things from higher time frame. You just went to entry time frame and you want to look at direction. You are considering this break of structure as a break of structure on 5 minutes. You want to look for, no, when you got it all wrong from what higher time frame perspective. So wrong. That's how. So guys, that's just the essence of today's video. Make sure you always go to higher time frame. It happens on different pairs. Back test it, right? Back test it severally. No matter what, no matter how hurry you had to do your analysis, you must have a directional bias. Where is the market going to today? Where has it bounced off from? Where does it want to go and bounce off? You get, once you have that, you're good. You're good to go, right? You're good to go. You'll not be eating multiple SLs like this. You be patient. Immediately you've seen this first violation, you'll be like, okay, right now market is just violating all this demand. I'm going to wait for another demand to be swept up. Then I'm going to catch a sell, a beautiful sell entry. And if you look at this market very well, you might have catch 1 or 2 SMC sell setups on smaller time frame, right? Because you know that this guy is heading to take out this trend line liquidity. Okay, so thank you very much guys for watching.